Hello and welcome to this week's edition of Invest Africa. I'm Alicia Seckham. Well, just last week, Malawi's public sector made headlines with employees agreeing to a 61% pay hike for the lowest paid employees, almost double the inflation rate to counter the devaluation of the kwacha and rises in the cost of living. During the strike, schools and the international airport were closed, and agreeing to increments means now having to face cuts in other areas where President Joyce Banda has instituted painful economic reforms backed by the IMF and foreign donors since winning office last year. This week, we unpack the opportunities and challenges that Malawi presents.
The southern African landlocked country of Malawi is ranked among one of the world's most densely populated countries in the world, with a population of around 16 million people living within 94,000 square meters of land. Like most developing countries, the economy is dependent on its agricultural sector, which accounts for 1/3 of GDP and generates 90% of export revenue. Although tea and coffee are some of the country's cash crops, tobacco is key to Malawi's economic growth, as it accounts for more than half of its exports, which it trades with India, Germany and South Africa. Import partners include South Africa, Zambia and India, where food, consumer goods and equipment are imported. The overvaluation of the kwacha against major currencies, especially the US dollar, saw an upsurge in import demand. This, coupled with a shallow export base, saw the current account deficit widen to $845 million in 2011-2012. That's from a deficit of $548 million in 2009. However, economic reforms such as the devaluation of the kwacha and a market-determined exchange rate has restored credibility to the Malawian monetary policy environment. President Banda, Africa's second female leader after Liberia's Ellen Johnson Sirleaf, has put a number of reforms in place since taking office in April. These include firing inefficient government officials and implementing austerity cuts, which have been lauded by the international community and are expected to steer the economy onto a path of sustained recovery. Tumisho Makanyele, Johannesburg.
Well, joining me in studio this week to take a closer look at Malawi as a business and investment destination is Simon Schaefer. He's Senior Analyst at Frontier Advisory. Abel Myberg is Associate Director at Africa Desk BDO. And Samantha Louis is Regional Director at the Chartered Institute of Management Accountants. Welcome to you all and thanks so much for joining us. Simon, let's start off with you. I mean, that pretty much setting the scene from a broad macroeconomic perspective. We've got Malawi ranking number 157 on the World Bank Doing Business Index out of 185 countries. It's not very encouraging, but what sense are you getting of the kind of and the pace of economic reform we're seeing in the country right now under new President Joyce Banda?
If you look at the year before 2011, 2012, actually the business environment has deteriorated to this year. I hope that the reforms initiated by Joyce Banda will bear fruit soon, but I guess it's a long way to go, and it's very early to say after 10 months in power if her reforms will bear fruit. I'm pretty confident that the new policy stance on the devaluation of the currency will, after a short period of hard time where we saw inflation rising, bear fruits, so that the export goods will be more attractive to the outside markets.
For now, though, it's still a very challenging environment we're looking at. Abel, the bar's been set pretty high, though. We've had the President herself saying at the start of this year that we will see a sharp improvement in the economy within the next 6 months because of the policies and initiatives that her administration has put in place.
No, definitely, because if you look at the recent visit from the IMF, I think it was 2 weeks ago, in Malawi, there was encouraging messages that came from the talks they had, as far as the commitment she's showing and the government is showing towards developing the economy in the sphere that the IMF wants. So hopefully, if anything goes okay, and according to plan of the review, that they can receive I think it's a $20 million advantage from the IMF, which will definitely help towards that further development
We've certainly got those finance institutions like the IMF and the various donors that do contribute to the economy coming through and positive. Is it enough in your books, Samantha, to restore the credibility of Malawi's monetary policy and that entire environment?
I think it's a positive start. I think there's a long way to go. Economies, unfortunately, never turn around or swing up in 6 months, although the reverse is sometimes true. What I think is probably the biggest challenge she's going to face is how to diversify her economy and how to really build a thriving economic sector that's not totally dependent on her agricultural imports.
That's exactly it. We've had the insert able highlight that 1/3 of GDP is coming through from the agricultural space and generating 90% of export revenue. And so you've got that diversification or lack thereof flashing red on the radar screen right now. What do you make of the kind of stride that's being made to diversify that economy at this stage?
Yeah, it's very interesting. If you look at that in terms of the incentives that's coming through for the government as well in the agricultural sphere, that one's not only looking at it itself. There's obviously spill-offs industries that can make use of the agricultural sector. And one of the interesting facts that I notice is that agricultural, and especially in tobacco and tea, is now seen as manufacturing, so they can then get the benefits that's linked to manufacturing in terms of huge incentives. So that definitely one can see from the development thereof, that there will be the diversification, from that industry itself.
Simon, it's going to be a tough road ahead, though, especially where you've got the IMF recommending cutting or postponing non-essential spending, because there's a fine line, because it's that spending that would actually work to get the economy on the right path, but you've also got to make sure that where you are cutting back, it's not acting as a disincentive to business.
Yeah, well, I think that's always the challenge, that you balance the twos. That you, on one hand, you try to restrict what you're spending on, and on the other side, you have to spend on the right things. If you look what happened after devaluation, that, for example, the fuel prices went up quite substantially. If you look at that in rand terms, I think the litre of petrol sells at 17 rand, which is, for an extremely poor country, extremely high. So maybe there needs to be some measures in place that counter this kind of development. Yeah,
if you're looking at that, we've had, Samantha, government putting some incentive on the table. I mean, I picked up that we're looking at taxation policies, for example, that are pretty standard, broadly speaking, but there's a 0% for 10 years or 15% for companies operating in priority industries. What do you make of the effectiveness of incentives like that?
Incentives are always a challenge, because if you don't manage them quite carefully, people come in, take advantage of the incentives, but they don't deliver the results that they're intended to deliver. And I think what we're seeing is a political will to engage and to incentivize people, but it's going to be key how they manage how those incentives are operated over the next couple of years.
Not only key how they manage that entire implementation, Abel, but there's a danger with incentives like that, in that once it's put in place, it's very hard to reverse those policies. So how do you mitigate against the risk that brings to the table for investment?
I think that's a problem with any developing economy, that we try to balance it off in terms of incentives, to bring in the new investors, not only foreign investors but local investors as well. And so for me, there definitely need to be strict policies in place, to monitor this, based on certain regulations. But also, you also don't want to run the fear of negating whatever you've built up so far. If you look at later developments, in terms of the New Companies Act and so on, to make the ease of doing business easier. But there are certain areas that could be looked at. For me personally, but one of the problem areas in Malawi is the lack of infrastructure as far as power and then electricity. It goes with that, so that constraints on prices that's charged.
Yeah, you've got a lot of emphasis being placed on the kind of capital investment companies themselves can bring to the table. Simon, we've seen certain allowances for expenditures. For example, 40% investment allowance to a manufacturer in the first year for new machinery, mining allowances of 100% of mining expenditure incurred in the first year of assessment as well. It hasn't seemed to be triggering enough of an attraction, though, because we're still looking at an economy that isn't diversified?
Well, I have to add to Abel's point. Obviously, if you have incentives in place, you have the risk of a race to the bottom. Everybody in the region is trying to get incentives in place to attract investments.
Yeah.
And if you don't have the infrastructure in place, you can have the best incentives, but nobody wants to produce in your country. Mm-hmm. So if you don't have the power to produce, if you don't have the infrastructure to get the product out to market, the incentive itself doesn't help.
Absolutely, and that also hinders just how much these investors can play their part in contributing to this economy.
And it's a landlocked country with, geography, I'm afraid, can't be changed. So that brings its own constraints and challenges. I also think the cost of doing business once you're there needs to be looked at. Things like, can you get the right people with the right skills to be delivering productively? The insert said that they were going to be getting rid of unproductive government employees, and that, I think, is a challenge probably of governments all around the world. But in addition to that, what I'm encouraged by is seeing, for example, the Accountant General, the Auditor General, putting in schemes to really train their people at the highest level. Yeah. And I think when you have productive civil servants who are properly trained, who are efficient, and are really good at delivering what needs to be delivered, then that's a step in the right direction too.
And who can be trusted as well, because we've had corruption glaring very brightly when it comes to government officials and their management of the economy as well. What's interesting and being highlighted is that the country doesn't offer any special incentives, Samantha, to foreign investors, and that incentives for foreign investors have to be specifically negotiated with by the investors with government. I mean, that seems like very fluid policy, and is negotiation the right route to be taking here? Because that then leaves room for corruption if you don't have the right governance structures in place.
Potentially it does, but I think it also gives the government the opportunity to make sure that it attracts the investors it wants to work with.
I asked the question, Abel, because surely this opens up an uneven playing field.
There's positives and negatives. I mean, what I've found through the whole of Africa, that accounts for most of the African countries, that if you try to minimize the almost, what can one say, the actions from government to a central investment agency or a promotion agency, then you eliminate the possibilities of corruption and bribery, because you centralize it through one central agency, which then can negotiate on that terms with the government. And so she actually almost leveling the playing fields as far as I'm concerned, so.
Well, let's hit pause on the conversation for now. We're heading into a quick commercial break, but there's more on Invest Africa when we return, so stay tuned.